What is going on, investors? My name is Emmanuel, and investors, I think it's time that we go hunting once again, because the sell-off that we experienced from mid-February up until the run-up to tax day, that was beautiful. That was absolutely beautiful. We were able to take full advantage of those beautiful dips that we saw in the likes of Celsius Holdings, Tattooed Chef, PLTR, GoPro, AMD. We were able to strengthen our high conviction stocks. And now, you can see Celsius today is up crazy today. Tattooed Chef is also up. We've recovered from our lows. PLTR is doing quite well today, up 2%. Still has a way to go. But again, all of these companies, for me, I feel like I have my positions built. And now it's a simple case of following the company's performance over the years, come in and just hold, and enjoy the run. So now I feel like it's time to start searching for the next treasure, okay, for the next buried treasures. The stock market game itself is a treasure hunt, and that's what I love about this game so much. So in this video, I'm going to share with you guys 4 brand new stocks that I have found that are quite interesting, okay? I'll give you my reasons for why I think they're interesting. And there might be companies that you might also find interesting and then you can add to your watch list and do further due diligence on. So if you gain any value from this video, please make sure you smash the like button. And if you're new to the channel, then hit the subscribe button and the notification bell to stay up to date with all of my latest videos. And if you want to stay up to date with all of my latest research and also my buy and sell alerts, you need to join my Discord group, and you can do so by smashing that Patreon link in the description below. So with that said, let's dive into the first stock. So the first stock is Sonos. Ticker symbol is SONO, okay? Currently has a market cap of 4.467 billion with a PE ratio of 38.89, which isn't too bad, and an earnings per share of 92 cents, okay? One of the reasons why this company first caught my attention is pretty much their financials, okay? This company has beautiful financials with an operating margin of 8.50%. So what that pretty much means is for every $100 that the company makes, $8.50 of that is kept as earnings, which is very, very good, especially in an industry where the margins, usually you'll find margins are very, very tight, okay? This company has a beautiful balance sheet sitting on $638 million in total cash versus debt. Pretty much 50 million debt. They could easily clear off their debt right now. So the company literally has no debt. And this is exactly one of the main criteria that I want to see in any company that I'm interested in. Do they have a strong balance sheet? Their current ratio is sitting at 2.37. And that means that this company's total current assets currently exceed their total current liabilities. And all that pretty much means is within the next 12 months, the chances of this company going bust is pretty much next to zero. This company has an incredibly strong balance sheet with a positive operating cash flow. Now, if you're not familiar with Sonos, they are well known for their range of speakers, okay? They have a wireless speaker set, like they create almost like an ecosystem with their speakers. And I'm sure if you don't own a Sonos set of speakers, maybe your friends does, but Sonos, they're very well known within the speaker sound industry. And as you can see, they have a range of products here, which are all wireless. They have their home theaters, they have the Beam, the subwoofers, the Arc, and also with the components, they have the amps, their ports, and a whole range of products. However, this company are expanding, okay? And they recently signed a partnership with Audi, right? To bring its audio tech into cars. And it's not just any of Audi's cars, it's the electric version of their cars. So it says here, Sonos has partnered with Audi to equip the automaker's Q4 e-tron with sound, which is a first for the California-based audio company best known for home speakers. So like I said, Sonos is known for their home speakers, but the fact that they've been able to land a partnership deal with Audi, and I believe if this partnership goes according to plan and goes really well, who knows? Potentially, Audi could select Sonos to provide the sound system for their other range of electric vehicle model cars. This is just the beginning, in my opinion, and I love the fact that this company are expanding out of just the home speaker sound, the home cinema sound, into now the electric vehicle space. And this made me even more bullish on Sonos. Okay, they have strong financials with a very strong balance sheet. They have a well-known and very well-respected brand, which gives it a strong moat. And now the company are expanding into cars with a partnership with Audi. I think this is a sign of good things to come for Sonos, and that's all going to reflect on its top and bottom line. So with that said, let's take a look at the share price. So like most high growth tech stocks, Sonos did see a retracement. From the sell-off that we saw mid-Feb to the run-up to the tax day, Sonos is down. Let's take a look. Sonos saw a 30% drop in that sell-off, but hasn't quite recovered as quickly as the likes of Celsius Holdings and other companies that face the sell-off. So I think, in my opinion, this creates an opportunity. This creates a great buying opportunity. And if you include the Fibonacci retracement tool, you can see here it's currently about to approach a key level of multi-month resistance at the price of $36.72. And I think this is a good buying opportunity. Okay, don't take my words for it. Again, none of this is financial advice. I'm not a financial advisor. But I think this is a great opportunity. I mean, with the partnerships that they have lined up now with Audi, and with a strong balance sheet, and the fact that it's sold off 30%, and the company also has a relatively small market cap, I mean, this screams opportunity for me. And this is definitely a company that you want on your watch list, in my opinion. The fundamentals, the financials, it all makes sense. Okay, now moving on to the next stock. The next stock is called Hims and Hers Health Inc. Ticker symbol is HIMS. This also has a $2.34 billion market cap. And Hims used to be a SPAC with Oak Tree Acquisition, I believe it was. Now, Hims has been on my radar for a couple of months now. I think since December, this company has been on my radar. It was a SPAC with Oak Tree Acquisitions, if I'm not mistaken. And if you take a quick look at the share price, you can see it was one of those companies that had a huge run up when the whole SPAC bubble was in play. So this company went from the SPAC price of $10 all the way to $24 on the announcement of the merger. And as since then, the share price has obviously tanked in the whole SPAC attack. And it's currently lost half of its value from its highs. And it's now currently trading at $12.13. And I think the market cap and the valuations at the moment do make sense. Now, they recently reported their Q1 earnings and I was blown away. Okay, I was blown away by their earnings. They reported top line growth of 74% year over year to $52.3 million. And guess what, guys? Look at their margins. Their gross margins were 77%. And that's up from 69% on Q1 2020. I mean, that's incredible. That is insane. Okay, now Hims, they're a multi-speciality telehealth platform that connects consumers to licensed healthcare professionals. Okay, now you might think, okay, why not Teladoc? The reason why I like Hims much better than Teladoc is because these guys appeal to a much younger audience. Okay, now I shared some research with my Discord over the weekend, and I'm going to share a little bit with you guys now. There was a statement that the company made, okay? So the majority of our customers are millennials, okay? At the beginning of their healthcare journey, and we intend to grow with them as their healthcare needs evolve, okay? So that is their target audience. Teladoc, in my opinion, was a C-Roni play. I'm sorry to say, I might be wrong in the long term. Hims' target audience are millennials. And as the statement from the company says, they intend to grow with the millennials as their healthcare needs evolve, okay? Now, one of their methods for attracting millennials is by creating this app. So their product consists of this app. Okay, so users will be able to download the app. They'll be able to quickly navigate through the app and select their condition. That will put them directly through to a healthcare professional. And based on the communication that they have with their healthcare professional via the app, as you can see here, their shipment is on the way. And usually it takes within 2 business days for them to get their products. So Hims and Hers, I believe, are well positioned for the millennial generation. Their branding, their logo, everything is just right, in my opinion. I absolutely love their branding. And I think from a long-term perspective, with their target audience being millennials, once they get used to this, they're going to continue using this app for many years to come, which translates to recurring revenue for the company. So with Hims, I see a lot more growth with this company, especially at its $2 billion market cap. I will not be surprised within the next 2 to 3 years, this market cap doubles, and that represents a 2x return for us. Okay, so I'm very bullish on this company long term. However, when you look at their Q1, they did report a net loss of $51 million for Q1 2021. And that's compared to a $6 million loss for the first quarter of 2020. Now, the reason for such a drastic net loss this quarter was due to a one-time stock-based compensation. Okay, and that's the key point here. It's a one one-time, okay, stock-based compensation, as well as a one-time stock-based compensation. They also had to cough out some transaction bonuses, expenses that related to their merger with Oaktree Acquisition Corp. So like I said, they were a SPAC. So as we approach Q2, I think all of these expenses and these stock-based compensations will subside, and we are going to see a much better, much improved bottom line, in my opinion. And I think that will draw more attention to this company. So taking a look at the share price more closely, it did have a sell-off from its highs of $24 a share, and it's currently pretty much slashed in half and trading now at $12. It's interesting. This zone right here is very, very interesting for me. And I do find the valuations right now very attractive. And I think Hims and Hers is a company that you need to have on your watch list and to do further due diligence on. Okay, I have shared my DD and my research with my Discord. If you want to get access to the full research and my full thoughts on the company, you need to join my Discord group. And once again, the Patreon link is in the description below. Now moving on to my next stock, and it's Coinbase. Ticker symbol is COIN, and this company needs no introduction on this channel. We did a live stream of their earnings before their direct listing, but since their direct listing, they have been on a war path downwards. I mean, where is the bottom for Coinbase? Somebody find me the bottom, because this is painful. Okay, from its peak since the direct listing, the stock is now down almost 50%, guys. I remember this had a ton of hype on its direct listing day. A lot of YouTubers, finance YouTubers that I respect, they bought in on day one, and they've just been buying the dips. I mean, Kathy Woods, ARK Invest. When are they not buying Coinbase? They have been dollar cost averaging since day one. Somebody find me the bottom, please, because this is currently on a war path to the downside, and it's not pretty. Okay, but it is getting attractive. You know, the lower this company goes, I mean, the market cap right now is sub $60 billion. When it direct listed, it was close to 100 billion, you know. And I remember a lot of YouTubers were talking about you will never be able to get Coinbase sub $100 billion. Definitely buy the direct listing. And I'm sorry to say, they were all wrong pretty much. And, you know, I've been patient with this company. I do not want to try and catch a falling knife. So for me personally, I like Coinbase. I love their financials. Unfortunately, their value, I believe, is being tied to the likes of Bitcoin and Ethereum. The whole crypto market itself has been on a downtrend ever since Tesla announced that you can no longer use Bitcoin to buy their cars as a result of environmental concerns. For me, it's a load of nonsense, in my opinion. And I did lose a lot of respect for Elon Musk. I feel like he could have handled the situation a lot better. But unfortunately, it is what it is. I think the crypto market as a whole has a ton of opportunities right now, but stocks that are also connected directly to the crypto market, like Coinbase, are looking very, very attractive. So I'm not trying to catch the bottom here. As you can see, the day it's gone red for the day again, another red day. I personally would like to see the price of Coinbase consolidate for a couple of weeks. And for me, that would represent an opportunity to enter, okay? And it will be a speculative position. It will not be a high conviction position for me. I am bullish on Coinbase long term, but not that bullish. So I would love to see some consolidation in the share price, and then I might start a small position. Because think about it, investors. If Coinbase eventually does return to its peak and continues higher, let's just say it returns to its peak, that represents a near 90% return on our money. Are you going to say no to 90%? Absolutely not. So I think Coinbase, in my opinion, is worth a small position. But again, don't try and catch a falling knife. Wait for price to consolidate for a few weeks and then potentially enter your position. That's what I plan to do anyways going forward. Now, last but not least, we have Alibaba. Ticker symbol is BABA. Now, Alibaba, me and Alibaba, we have a love-hate relationship, okay? I've been in and out of Alibaba many a times. The last time I had Alibaba, I sold it at $260. This was during the whole Chinese delisting thing. This was way before the trouble we had with the Chinese government. So I sold out of Alibaba at $260. But I'll be lying if I said these current valuations are not attractive right now. If you take a look at the share price a bit closely, you can see it's had a huge sell-off from its highs of about $320 to where it is now. It's down down 33%, 34%. At the moment, I would love to see it touch $200. I'm being very patient with Alibaba. If it touches $200, I might start a small position at these levels because I do think the sell-off right now is very, very harsh. But again, if I do start a position, it will not be a high conviction play. I'm not necessarily bullish on Alibaba long term, but I do like the valuations at the moment. And I do think it's presenting a nice opportunity for us to capitalize and make some quick profits on. So Alibaba is the next stock that I think you should have on your watch list. But the prices I'm looking at, I want it about $200. If we can drop sub $200, then I would probably start a position. So those are my 4 stocks that are on my watch list right now. I'm still hunting right now, so I'm still on the lookout for more stocks. So with that said, please make sure you comment below some of the stocks that you are watching closely. I read all your comments, and you guys do provide me with some great investing ideas. So please comment below the stocks that you have on your watch list. I would love to read it and gain some inspiration from what you guys are thinking. So with that said, thank you so much for watching. Remember, none of this is financial advice. If you did gain any value, make sure you smash that like button. It helps get this video out to more people. And if you are new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest video content. Thank you so much for watching once again. I appreciate your time, and I'll catch you in the next one. Peace.